Hi, Dean Jenkins with Follow Me Trades, and I'm getting ready to launch a new dividend strategy course. Over the past couple years, I've been looking into this. People have been asking me about this. A lot of traders and investors that I know, they allocate parts of their overall net worth or portfolio. Some for more active swing trading, and some people even day trading, but then some portion for a little bit longer term, a little bit more stable, and more hands-off, investing or trading. And so dividends, a dividend strategy can be a great part of your overall portfolio, your overall approach. So why dividends? Well, you get paid to own the stock, right? They pay quarterly dividends. Quite a few stocks do. And those dividends quite often are a larger yield than other, fixed income instruments like CDs, currently going about 5%, or T-bills just under 5%. Some dividends, for good high quality companies can be 6, 7, 8%. So it's better. And you get some growth on the price of the stock. So in addition to the quarterly dividend, you can have the stock increase in value as well if you choose the right stocks at the right time. And the right stocks at the right time is absolutely key to making the dividend strategy work, in my opinion. There's dividend trading advice is out there, dividend investing advice is out there, and the most common you're going to hear is just, hey, go buy a quality blue chip stock with a good dividend, and then ignore the price movement of the underlying stock and just collect the dividends and wait it out. If it goes down, don't worry about it, ignore it. The price will grow over time. That's the typical advice. My question for that is, well, how much time and how much drawdown am I expected to ignore? Because me personally, I have a hard time ignoring a large drawdown. And here's an example. If you were to apply the common dividend advice to WBA, Walgreens Boots, right? I'm going to look at a couple of examples. I'm going to start, say he bought it at the beginning of 2021, after the shock of the pandemic and things started coming back. So we'll just look at a couple here. What if you bought it at the beginning of 2021? Here's Walgreens Boots. It was part of the Dow 30, a blue chip, paying good dividends, 6.43%. So if you bought that and just held it and ignored it, well, that's a 70% drawdown in 3.5 years. Too much for me. I can't ignore that. I don't care what the dividend was, right? A 70% drawdown? Are you kidding me? So, that's, Walgreens Boots is a, kind of an extreme example, but there are others. And let's just look. What if you had bought Kohl's at the beginning of 2021? It went up initially, right? But say you got in there at, call it $45. Well, it's sitting at $21. It's lost close to half its value. Again, I can't ignore that. There's others. Let's look at Whirlpool. Whirlpool, considered a blue chip company, leader in their industry, right? Same thing. If you bought that at the beginning of 2021, buy it around $200. It's down at, my goodness, 89. It's lost, over half its value. I can't ignore that, and I'm not going to. There are good examples. Take Dividend Energy. It's a popular dividend stock. So Dividend Energy, if you bought it at the beginning of 2021 here at about $20, you'd be happy. Had a big run up here, and it's still double. So you would have collected dividends all the way, and also had a doubling of the stock price. So that's pretty good deal. So they're not all terrible, but just kind of blindly, hey, go buy a blue chip company, collect the dividends, ignore the price. That strategy is not for me. So my strategy has a unique twist. So first, just like most strategies, hey, buy a quality blue chip stock with good dividends. That is a good start to a dividend strategy for sure. Okay, but what I add is some very simple technical analysis that shows that this high quality blue chip stock with a good dividend is in an uptrend. a long-term uptrend. It's not in a long-term downtrend like a couple of those examples. So we're not going to have to suffer through, we're not going to watch price on a daily basis or whatever. We just want to make sure it's in a long-term uptrend. And then when that trend ends, we're going to get in for that uptrend. We're talking years here. And then we're going to leave when it's over, right? Months or years, not days or weeks. This is not active trading. You can review this, on every couple of weeks, once a month or whatever, and then make adjustments as necessary. But let's get high quality blue chip dividend paying stocks that are in an uptrend, and some very simple, easy to repeat technical analysis to confirm that. So how's this strategy working? I've been working on this for quite a while, and I paper traded some stuff. I tried some things that didn't work, and then a year ago, I went and applied these concepts that I've come up with to two trades here, AT&T and Verizon. Now, they're both in the same sector, but I purchased these July of 2023, and today's price, actually yesterday when I put the presentation together, June 18th, right? So I bought AT&T at $15. Yesterday's price was $18, so there was a 20% gain in the underlying shares. So that's pretty good right there in a year, 20%, right? And then, every quarter they've paid out a dividend. Now I'm about to collect the next one, so I included it. So a 7.4% gain on the dividends, in about a year, giving me a total gain on AT&T of 27.5%. And I did the research, I bought it, I held it. That was it, right? It didn't take a bunch of management. This means buying the actual shares and holding them. Verizon, I did the same thing. Bought it on the 24th of July, $35. Yesterday's closing price, $39.99. That's a 14% gain. The dividend, 7.6, giving me a 21.9% gain. So those are relatively easy to find if you just have the right criteria. And again, when do we get in? When do we get out? Buy blue chip companies that pay a good dividend that are in a long-term uptrend. All right, is this a good time to do it? Well, surprisingly, there's a bit of a negative correlation between the overall market and these blue chip dividend stocks. When the overall market's going up, some of these go down because people are moving their money to the high flyers. But you don't have to. So here's a quick screen I ran using Schwab's website of high quality blue chip companies with a Morningstar rating of 5. So the highest Morningstar rating, meaning these are high quality companies that are undervalued. So an undervalued company. Now we got a list to look at and see if then the technical criteria for the beginning of an uptrend is there. And just a very quick screen gave me 12 stocks that pay great dividends, right? And are undervalued, and they're great companies. So these could be outstanding candidates for this strategy. All right, so I said I'm going to launch a dividend strategy course. There's really 3 main components to the strategy, to the course. The first is what I've been talking about mostly, is just buy and hold high quality dividend stocks. You're typically going to hold it 1 to 3 years or more. And I'm going to teach the specific criteria for dividend stocks to buy and hold. Both the fundamental criteria and then the technical criteria to confirm we're in a long-term uptrend, right? When to buy, when to sell, and how to scan, how to go find these. Okay, I'm also going to include a short-term dividend trading strategy, which is from a few days to several weeks, where you really understand the key dividend dates and when to buy, so you get the dividend, and then you can maybe get a little appreciation or even a break even on the stock, but capture the dividend. Right? There's some specific criteria for a short-term dividend play. It's pretty fun, pretty interesting. And again, if you're into if you're just into longer-term investing, you could just stick with the first strategy, buy and hold. But if you're interested in some more active trading around dividends, then the second strategy, right? Knowing exactly the details of the dates and what they mean and how to trade that, so I'll teach that as well. That's included in the course. And then also there's some option strategies for dividend investing, which could be applied to either the short term or the long term. And that's how to use puts to get paid to buy a stock that you want to buy. It's pretty cool. And then once you own it and you're holding it for dividends, how to get paid to hold the stock in addition to the dividend and the underlying price growth. So that is all going to be included in the course. All right, course is going to launch summer of 2024, into July, into August. You know, I've got the raw material for the course and the strategy. And I just want to refine it, polish it up, and get it ready to launch. So we'll launch that this summer. It's going to include written study guide, training videos, and then live training sessions when the course launches. And they'll be recorded and archived for future reference. And if you participate in the pre-launch, like buy the course now before it launches, you're going to get a discount, which I'll show. And I'm going to give you right away before the launch 3 high-quality dividend stocks that are ready to buy now. So, you know, before I provide the course and teach you how to find it on your own, I'll give you 3 trades that are ready to go right now, 3 dividend stocks. And I'll give updates on those so that you can act with confidence before the training is available. And I'll be available to answer any questions before the actual course launches if you want to participate in those. Because I think the timing is good now. And it's always good, but, you know, there's good times where there's easy pickings, right? And I think we got some pretty good easy pickings now. All right, so the pre-launch, and when the course launches, then the price is going to be $9.97, which I think is a good fair deal. I'm going to do my best to deliver, you know, outstanding value like I do with all my courses. But the pre-launch price is a 50% discount, $4.97. And remember, if you participate in the pre-launch and you buy it now, I'm going to get you 3 dividend stocks to trade right now, and then full pre-course support to manage those trades. So that's a quick overview of what the course content is all about. And that's a limited time offer. Once the course launches, then it's going to be full price, which again I think is a good deal. All right, thank you. And if you have any questions, don't hesitate to reach out to me, Dean@followmetrades.com. All right, take care.